What if dollars could move across the world in seconds, 24/7? That's the stablecoin revolution, and it could reshape global finance. Traditional international payments can involve banks, intermediaries, currency conversions, and settlement windows. Money moves, but the financial system around it can move slowly. Stablecoins take a different approach. They are digital assets designed to maintain a stable value, usually by being linked to currencies like the US dollar. And the dollar matters because it remains deeply embedded in global trade, finance, and savings. Stablecoins essentially put dollar-denominated value onto internet-native infrastructure. First, there's USDT, issued by Tether. It is the largest stablecoin by market presence and is designed to maintain a one-to-one relationship with its underlying fiat currency. Then there's USDC, issued by Circle. It is designed as a fully reserved digital dollar, redeemable one-to-one for US dollars. But here's the key question. If it's digital, what gives it value? The answer is reserves, redemption mechanisms, market liquidity, and confidence in the issuer. When eligible users or institutions provide dollars to an issuer, new stablecoins can be minted. When they redeem them, tokens can be removed from circulation. Now comes the biggest difference. Blockchains operate continuously. There's no weekend closing bell for the network itself. Digital dollars can move around the clock. Imagine a company in India paying a supplier in Europe. Instead of coordinating multiple banking rails, the company could send a dollar-denominated stablecoin directly to a compatible wallet. The same concept could transform remittances. A worker abroad could send digital dollars home without waiting for traditional banking hours or relying on a long chain of intermediaries. For businesses, stablecoins could also become treasury infrastructure, helping companies move liquidity between markets and manage global payments more efficiently. But stablecoins aren't just digital cash. Because they live on blockchains, developers can build software around them, creating programmable money. Imagine invoices that automatically settle, marketplaces that pay sellers instantly, or financial applications that move capital according to predefined rules. Stablecoins are already deeply connected to decentralized finance, where users can trade, lend, borrow, and provide liquidity through blockchain-based applications. USDT and USDC matter because they bring something crypto has historically struggled with, a digital asset designed to behave much more like familiar money. Now imagine millions of wallets, businesses, exchanges, and financial applications connected through interoperable digital dollars. But the future depends heavily on regulation. Governments and financial institutions are increasingly defining rules around licensing, consumer protection, and stablecoin issuance. Stablecoins aren't risk-free. Issuer risk, reserve management, regulation, blockchain security, and liquidity can all matter. A stablecoin is only as trustworthy as the system supporting it. USDT and USDC share the same broad goal, but their issuers, reserve structures, regulatory approaches, ecosystems, and market footprints are different. So the bigger question isn't simply whether stablecoins will replace banks. It's whether they can become the digital settlement layer connecting banks, businesses, and people. If that happens, money could become more like the internet, global, programmable, always available, and capable of moving as easily as digital information. That could change payments, remittances, commerce, treasury management, and financial applications, potentially making global value transfer faster and more accessible. The stablecoin revolution isn't really about creating another cryptocurrency. It's about rebuilding how dollars move. Would you trust digital dollars as the future of global finance?